Good day, ladies and gentlemen, and welcome to today's webcast entitled A Deep Dive into the Marketing Tactics for Regulation Crowdfunding Offerings. Today's conversation is brought to you by Equities.com and Compro.biz and powered by Onstream Media. To submit a question or comment at any time during the webinar, please click on the Ask a Question button on the bottom of your screen. Simply type your message into the box and click on the Submit button. Alternatively, you can submit your question via Twitter using the hashtag AskEquitiesCom. All questions will be answered at the end of today's presentation. Please click on the Materials tab in order to download today's materials. At this time, it is my pleasure to turn the floor over to today's host, Enzo Villani, CEO at Equities.com. Enzo, the floor is yours.
Great. Thank you very much, and thank you everyone for taking the time to join this live conference. I have two folks here who have done a lot in the crowdfunding industry. One is the first person, actually, Ruth Hedges. She's the founder of the Global Crowdfunding Convention, the largest crowdfunding convention in the United States and potentially the world. And Darren Marble, who's the CEO of CrowdfundX. Ruth Hedges was one of the original people worked on the crowdfunding legislation for about a year and a half with a group of a team of people, and was in the battle to get this done. So that's why we're actually here today, and I think that's fantastic. And now she runs one of the largest kind of conventions in the world. And then Darren Marble is the CEO of CrowdfundX, and Darren, besides being a state champion high jumper, is actually one of the first actual pioneers in crowdfund marketing, both on the kind of reward-based systems as well as on the first one of the largest equity crowdfunding campaigns that have been done this year. So I'm going to turn this to our next slide. And, you know, the way that I wanted to actually structure this was that I think that everyone here probably wants to walk away with three key items that we actually agreed upon. One is that you want to know the difference between the equity crowdfunding and the other types of crowdfunding, and also within the equity crowdfunding space, what's the difference between Title III versus Regulation A+, and even in Regulation A+, there's the testing the waters piece first versus a full Reg A+ campaign. We'll go through those three areas in basic detail, and then we can take actually questions later. Two is the best practices, you know, and how do we avoid the minefields when conducting a crowdfunding campaign, whether it's actually on, you know, whichever type of campaign you are running. And there are different minefields or different challenges with each of the regulatory side of this business, but there's also business best practices that have to be really focused on. And then three is, let's go over some basic examples. Let's do some case study type of a case study kind of study where we are learning from other examples that have been done, both in some of the most positive and successful campaigns, and also show and talk about some of the ones that have been challenged. So, and then lastly, we will go through the actual Q&A session, which should be about actually 20 minutes. We'll try to get everyone's kind of questions answered, and then we'll actually wrap up with the three most important things that we think everyone here should know about crowdfunding. So that said, let me turn to our next slide. And I just want to make sure I'm doing this properly. Okay. So I'm going to turn this over to actually Ruth Hedges first to talk more about Title III. So Ruth, can you please start with what are the things to really consider when marketing your Title III?
Hi, and thank you so much for everyone joining us today. We're very excited to be sharing this information. Title III was made legal, signed into law by 417 congressmen, two-thirds of the Senate, and President Obama on April 5th, 2012. after more than 18 months of going to Congress and trying to get them to include this in what became the Jobs Act. And then there was 3.5 years of rulemaking with the SEC, and now on May 16th of this year, Title III became legal. And what Title III is, it's a regulation that allows small businesses and entrepreneurs to raise up to $1 million and sell securities using crowdfunding. And crowdfunding, as I'm sure you all know, has been around now very successfully on platforms like Kickstarter and Indiegogo and real estate crowdfunding and also donation-based crowdfunding. GoFundMe has done over $1 billion of donation-based crowdfunding. And so we want to be able to use that process and incorporate it into regulation crowdfunding or equity crowdfunding. And that's what Title III and Reg A Plus allow people to do.
Ruth, this is more for this is really for someone who is running a small business. Everyone from the local, potentially the local bakery or the local shop, to a kind of cottage industry, to someone who potentially is doing their first tech startup.
Yeah, anything, a restaurant, a beauty parlor. I mean, all kinds of things. I mean, if there was a great sushi chef in your neighborhood or 40 minutes away and you wanted to bring him into your neighborhood, all of his clients could then, essentially help invest in his next sushi bar and have him open one up much closer to where you live, or a daycare center, or an assisted living facility. This is a game changer because now we can create the world we want to live in, and we don't need gatekeepers like bankers to determine who gets the loan based on their credit and collateral.
So is this concept tying the customers into the investment opportunity and vice versa? So you're kind of saying to yourself, it's like another level of the friends and family round, or the friends and family concept?
It's a much more expanded because you not only have your clients, your business associates, people who have been with you on this journey from the beginning and already are invested in you and in your success, but also people you don't even know all over the internet who may now want to own a piece of your company.
And how would you reach those people who you don't know?
Right. So that's some of what we're going to cover today, because typically with what's called reward or donation-based crowdfunding campaign, people can go online and say whatever they want about their technology or their restaurant or their art or their music or their game, their fashion, whatever they're crowdfunding, and they can say anything they want and drive people to the platform where they they either back the campaign, they make a pledge, or donation. With the SEC rules, they have made it extremely rigid and difficult to be able to do that. And so consequently, you can only have those kind of conversations in great detail behind the wall of the funding portal where the offering has been registered by the issuer. And and obviously, and so you can only basically do what's called a tombstone ad in a public way, leading those fans and followers and friends to the funding portal, where then they would have a more detailed conversation with the principals of the company. They would be able to see the business plans, the valuation, the information about the officers and directors, all the financial statements. All of that information it must be done on the funding portal.
So just two things. One is just to let everyone know, and we had it on slide 2, but I forgot to read it out. So we're not attorneys. We're marketing people. Okay. So anything that you learn from us here are really marketing tactics and so on and so forth. And really, what you should be doing is working with an advisor, a legal team, and ensuring that. And there are law firms that have really taken this on full-fledged, and we could even actually recommend some that have really taken on the forefront of crowdfunding and understanding the nuances, as Ruth has mentioned. Secondly, I think, Ruth, what you're saying is that you can build a community in order to build the community, in order to get investors, is different than potentially building the community for your product. So you could still market the way you want to market without, not just having a tombstone if you're marketing your product, correct?
Yes. So as long as you have a history of marketing your product, your company, and sending out a monthly newsletter and posting on Facebook and Twitter and doing all these things all the time, long before you ever decided to launch on a funding portal, then you are not doing anything illegal in terms of trying to mislead the public into conditioning, what they call conditioning the market.
Right.
So this is part of your normal business development.
So is the assumption that you probably should not be launching a Title III crowdfunding campaign unless you have a basic kind of community already set up? Because if you just go from zero to and then try to launch your product, aren't you going to be living in that gray area?
No, absolutely. But more importantly, you're not going to have a crowd to market to. This is not build it and they will come. This is not set it and forget it. This is not you go to a crowdfunding website and they bring you the crowd. You have to bring the crowd to your campaign. And it requires a lot of social media marketing. You have to become a thought leader. I always say people should Google themselves and they should Google their company name. And whatever you see, good or bad, is what the public's going to see. And if you see nothing, that's even, that's just as bad, because they're going to wonder, well, who are these people? They've never been validated anywhere. They've never been, reviewed on any site. They don't write about their expertise on LinkedIn or anywhere. If there's nothing there, that's not a good sign. So this is a 9 months, year and a half. It just depends on how long, quickly you can develop your social footprint on the internet.
So
and then use that social footprint to attract a crowd of a target audience.
So if I may, it sounds like what you're saying is that you need to build the actual credibility of your online brand personally as well as corporate-wise before even
Absolutely.
Going into this. And
right.
and we'll go into examples later of what are some of the things that people can do who are, let's say, social media shy is what I call them, or they're not used, they're not really interested completely in building their own personal brand on the internet for whatever reason, but they're really they have a talent, they're talented, they have a good product. So we'll go into some of those examples. Thank you, Ruth, for that.
You're welcome.
Any last quick statements that you would say about Title III that could help our group here understand?
Yeah, you can't do a pitch like a demo day. You can't pitch from a live stage about your startup, and a month later go on a funding portal. That's breaking the law. You can't. There are very specific things. Again, we're not going to go into all the legal bullet point things because we're not lawyers. But there are. You basically can. You can advertise anywhere you want. You can advertise on the newspaper, radio, the internet, but it can't say any. But you just can't say anything you want. You have to basically say that you're raising money. Come join us at funding portal XYZ. And so that's really, there are very, very strict rules about what you can and cannot say to drive people to that funding portal. Once they get on the funding portal, then they'll see everything. And then you can say all this stuff, and obviously you have to, during the due diligence process, you have to be able to defend everything you're saying, the valuation, all these things. But that can all be said on the funding portal. And the idea is that the investors, the potential investors, will go through a registration process with the funding portal whereby they have to confirm that they understand the risk they're taking and that investing in a startup, a small business, is risky, and that they have a high degree chance of losing their money. That's why the SEC built the system this way. It was
which is typical.
Investors.
But just so that folks understand this. So we work with mostly public companies, emerging growth, public companies, and now we started to work with privates too because of the Jobs Act and because you can because you can tell your story. Every single S1 that is filed for a new IPO, every single private placement memorandum that has ever been filed has significant risks put on it, and you have to put those all down, and it's pages and pages and pages of it. So at the end of the day, some of this stuff is not outside of the normal practice of capital markets formation. It's just new to someone who's trying to raise up to $1 million. You know what I mean? It's just new for a friends and family type of round. But don't forget, before this, friends and family rounds were only done through a banker or only through your friends and family. You could not generally market any kind of solicitation for raising money privately as a small business. You could only do presentations to sophisticated investors, venture investors, and so on. This has opened up that world. But, of course, they're trying to keep it controlled.
Right. 240 million non-accredited investors can now look at these offerings and potentially invest, where there was only 8.7 million accredited investors a pool before. So this is really a game changer, and it's opened up not billions but trillions of dollars that have been sitting on the sidelines for decades that we desperately need. I mean, all you have to do is look at the last lottery, and there was $500 million put in just a few weeks ago, put into the lottery that could have been crowdfunded.
Right. The chances of winning the actual lottery, you can get hit by like a satellite. You got a higher chance. But and those are state owned. But the other thing of it is too is that this should also help to adjust. All of this should help to adjust the gap between who gets the funding. There's been multiple studies that a lot of people who are very smart, very talented, cannot get funding for whatever reason because they're not in the network, they're not part of the group, or whatever it is. I don't really know. It's more of an anecdotal. I just recently saw a chart, and I was, this should help to balance that out a bit and give opportunities to everyone to raise capital, not just the kind of select few. I'm going to turn it over to I'm going to turn it over now to our high jumper, Darren Marble, and he's going to cover the Regulation A+, the three things to consider, but also just give us the overview, and then I want Darren to kind of go into his next level of slides, which really talks about storytelling and digital marketing, and then we're going to use that as a way for Ruth to come in and talk about her experiences, and I'll come in and talk about ours. So Darren, can you please take us into Regulation A+?
Thank you so much, and thanks, Ruth. So to start at a high level, just to clarify, Reg A+ allows private companies to raise up to $50 million over 12 months. And regulation crowdfunding, otherwise known as Title III, what Ruth is referring to, allows companies to raise up to $1 million. The beauty of Regulation A+ is that the issuer, the company raising capital, has the ability to generally solicit before they file the Form 1A with the SEC, and that's what's referred to as testing the waters. So the idea is that if you want to determine if there's enough interest in your offer before you incur the cost to file a Form 1A, which may be $50,000 to $100,000, before you bring in the accounting firm to help you get your 2 years of audited financials, which may be another $50K, you can actually go out tomorrow on your own and operated website. You can go on Start Engine, Seed Invest, other platforms, and literally say, hey, I'm thinking about raising capital, who's interested? And you can try to get a sense for the interest in the offer. That said, maybe at a very high level, the revolution here, what we're talking about, is that equity crowdfunding, by definition, is the online offer of securities. And this is quite disruptive. And I don't think this displaces or replaces investment banks or broker-dealers, but it definitely puts those firms in the position of kind of being next to the people, whether it's your employees, executives, or companies like ours as crowdfunding agencies that are doing the digital marketing. So the key with these campaigns, whether it's Regulation Crowdfunding A+, is that you're going and doing the marketing online. And so in our world, and for the PR people on this call, we think of it as paid, earned, and owned media. So paid media. We may buy ads on behalf of our clients with equities.com or Zacks or Investopedia. They may send newsletters. They may have banner ads. Earned media. We're going to identify 1,000 bloggers and editors who we think may be interested in covering the campaign and put a link to the campaign page. When we get 60 press hits for a project, that's earned media. And owned media is you've got your website, your mobile app, your customer list, your social media accounts. But it's a combination of paid, earned, and owned media is really how you effectively get the message out there. Now, I want to be very clear. Regulation A+ is not for pure startups. If you are a pre-product, pre-revenue company and you think you're going to go file a Form 1A because you have the ability to incur those costs and go raise $20, $50 million, you are absolutely kidding yourself. This is a much better fit for operating companies. And I'm going to tell you real quickly, we did an analysis the other week. The types of companies that are perfect fits for Reg A+ are going to be consumer products companies, companies that have physical, tangible products, that have customers, that are maybe coming out of a successful Kickstarter, Indiegogo, or even better, a regulation crowdfunding campaign have demonstrated the crowd wants to invest. Even more specifically, generally speaking, companies that are good fits for Reg A+ are going to have at least $2 million in annual revenue. They're going to have raised at least $3 million previously. They're going to have about 5,000 customers or more, have a fan base of at least 10,000 authentic social media followers across your accounts. You're going to have at least 10 employees, one physical office. So very high level and maybe somewhat generic, but if you don't fit that profile, you may struggle in your campaign.
Hey, Darren, could someone put that on a list, like a bullet pointed list, and share that? Because I mean, I'd like to. I know because I know it, you know it, but you know it's funny when I hear it now. It just sounds such more. It's almost like the qualification in bullet points.
100%.
So, it's a very different model. This is really for a company that doesn't really want to go public potentially, but wants to go what everybody's calling the mini IPO. Now, do people understand, though, I'm not sure if we covered this, but all of these shares, when you do a Regulation A+, they are tradable. It's just that there isn't a marketplace for it yet.
Yeah, that's correct. And at the same time, you're going to see secondary markets develop very quickly, so those shares will be tradable in the near future. And a lot of companies are opting to go to OTC, to NASDAQ, to NYSE. We're in a lot of those deals. But real quick, so we talked about profile of companies that are good fits for Reg A. You also have to be realistic and honest about the cost. This is not as expensive as an S1 or a traditional IPO. At the same time, it's not free or cheap. So I would ballpark your cost to do a Reg A+ campaign the right way around $300,000 minimum. Call it $150K for marketing. Again, paid, earned, owned media, video production, et cetera. Maybe $50 to $100 for legal, another $50 for accounting, maybe $50K for compliance. These are not cheap campaigns. Don't kid yourself and think that you're going to raise $10 million on a zero marketing budget and your campaign is going to go viral. You are not a fit for crowdfunding. To Ruth's point, the companies that are going to have success are going to come into a Reg A+ offering with customers, with a fan base, and your obvious investors are your customers and fans. So, quick example, I talked with a prospective issuer 5 days ago. Automotive startup had raised $15 million, 2 engineers. They dumped almost all of that money into technology development, zero marketing. In my eyes, it was a mistake in a lot of ways. They wanted to do a Reg A and raise $20 million. I said, guys, you are ahead of yourself. You've got to build your audience. You need 6 months of aggressive audience development. You may have to spend $50,000 a month to build the audience that you're going to require to really raise $10, $15, $20 million. So the key is to go into the campaign with an audience, and if you're aggressive about it, if you don't have that audience, you're not a consumer-facing company, you may have to spend a little more on marketing because you're going to run into a conversion issue. And so I want to very quickly explain this, Enzo. We ran the Elio Motors Reggae campaign. This campaign raised $17 million from 6,500 unaccredited investors. Elio Motors came to the table with a fan base. They had 40,000 pre-orders, another 40,000 emails, a big Facebook fan page. That campaign converted at 1%. What does that mean? It means for every 100 online visits to the campaign page on Start Engine, one person invested, 1% conversion. So 650,000 people were driven to that campaign over 5 months of marketing. It's a lot of people. It costs a lot of money to generate that traffic, and you have a fan base. If you have a business that doesn't have that fan base, you're not consumer-facing, your campaign may convert at 0.25%. You may require 300 or 400 page views to your campaign page, whatever platform you're on, to generate one investor. So that's a very easy way to quickly understand this is a marketing exercise. This is about funnel marketing. You're driving a lot of traffic at the top, and a very small percentage of people actually become investors at the bottom.
Yeah, well, we worked with CrowdfundX on this XY testing the waters campaign, and that was our first work, because we usually work with public companies and generating the market awareness for them and pointing them back to equities.com with the proper disclosures. But here we had a click-through right from equities. So what we were doing is we were funneling people. And what was interesting is I did see those levels of conversions. I mean, even on a click-through basis, it started off with millions of, 100 million impressions with, you get 10,000 people, and that's still a lot of people, but you have to run a lot of marketing here. And in the power of the internet, though, yes, this sounds expensive, but if you try to reach that amount of people with a general marketing push like a television and radio and all that, I think it would be even more difficult.
That's exactly right.
So I'm going to jump over to a couple of things here where we're going to start having a conversation, and really now this is more about what is the storytelling and the digital marketing, and Darren was good enough to kind of put together a couple of straw man slides so that we can walk through the process. This is, I think, the key attribute, and everyone who's a PR person and a marketer on this call is going to resonate here, which is, it's all about telling the story and how you tell the story, and then where is the story placed. But let's go through the actual three elements. And Darren, maybe you want to touch on this. Let me just jump to the slide. Sorry.
Absolutely. So,
and then we'll turn it over to Ruth. Go ahead.
So there's a lot of confusion about what these campaigns are. We see issuers are oftentimes misunderstanding what this is really all about, and they think it's a legal exercise. And unfortunately, it's far from it. You absolutely need a competent crowdfunding attorney, but that is a component. You will fail in equity crowdfunding if you do not craft your story correctly, produce it, and distribute it effectively. It is all about storytelling and digital marketing, and this is, by the way, nobody gets this, but this is how you are successful. Now, if you've run Kickstarter campaigns, if you're in PR, you've done Kickstarter, Indiegogo marketing, this is intuitive to you. If you've run the campaign that did $250,000, $500,000, you know this, but very interestingly, is for the capital markets industry, this is mind-blowing. They don't understand this. So crafting the story, you want to raise millions of dollars, you need a story that's going to connect emotionally with your target investor. Themes of ownership, themes of empowerment, themes of participation are winning themes. When we got introduced to Paul Elio, he's an engineer. He's developing a 3-wheel, 2-seat autocycle designed to get high mileage at a low cost. His temptation is to talk about the car. He wants to go into features, benefits, the engine, the supplier network, et cetera, et cetera. We said, Paul, we've got to change the paradigm. We need to tell a story not about what it is, but about why you do it. So, again, famous Simon Sinek TED Talk, people don't care what you do, they care about why you do it. You have to find that really strong emotional hook, and the secret is vision, mission, and values. That's your story. It's not your customers. It's not your product. It's not your revenue. It's your vision, mission, and values. And for the CEOs on this call, you're going to have to be delivering that message close up of your face in front of the camera, not a sponsor, not a speaker. No, you have to be delivering that message to inspire people. So you have to transcend your own company. You have to transcend yourself to be successful. And then you've got to produce the story. So it's the video, it's your primary sales tool, and the campaign page. It's a visual story told top to bottom. Crowdfunding campaigns are modern infomercials. And don't think you can produce a crappy, low-cost video and get away with it, because that's a path to failure. If you produce your story that's told right at a high production value, then the key is to distribute that story. And again, it's paid, earned, and owned media. When we market Reg A Plus campaigns for our clients, we have a 100-point marketing plan, a 100-point digital marketing plan. We have tens of thousands of dollars in paid media budget to drive paid traffic. This is not putting out a press release, hitting 50 bloggers, 50 editors. PR is crucial, but it's one of 10 basic activities that have to happen in order to be successful. So those are really the three elements to these campaigns, and I'll very quickly talk through them. So you're a company, you don't have the fan base Elio does, you don't have the customers. How do you build an audience before you go into your Reg A Plus?
Wait, Darren, hold on. I want to give Ruth a chance here to kind of give us a little bit of feedback. So one of the things that Darren mentioned was the thing about crafting the story and crafting the audience. So Ruth, what are some of the things that you've seen in allowing people to work, to kind of do this? And isn't this really the best opportunity or a bigger opportunity now for the PR and the marketing people of any of these organizations to really take this by the horns and really own it?
No question about it. I mean, you have, for example, Pebble Watch has done 3 Kickstarter campaigns, even though their product is now sold in Best Buy. And because of the value of sharing their story. And obviously, raising money without giving away any equity isn't a bad thing either. But they were the first really sort of mega campaign in 2012. They raised $10 million. And then in 2014, they raised $1 million in the first 45 minutes and then proceeded to raise $20 million in 30 days. And they actually are just finishing up their 3rd campaign. And I don't believe they're doing it specifically for the money. I think they're doing it to share that story. Because that story has obviously carried them a very long way. And so, the other side of this is that you are trying to make a connection to human beings. And most marketing material is salesy. It's, here are our features, here are the benefits. This story is a way to make a human connection and build a larger audience of people. So what about, as Darren mentioned, he had Paul Elio, who's the engineer, but Paul already was kind of, he was an engineer, but he was a pre-marketer. I mean, he was already getting the reservations, and he was doing, PR. I kind of recall seeing things about Elio Motors, 3 or 4 years ago when he first started, and he was in a couple of publications because he has such a unique vehicle. But what about that person who doesn't want to, who's a CEO? I mean, who doesn't really want to build their brand personally? They're not really interested in doing that online. Should they be even going near any of this, or should they find someone else to be the voice of the company? Ruth.
Yeah.
You know what, Darren, why don't you answer this?
I think it's an interesting question, Enzo. I think if you're not willing to put yourself out there and be vulnerable, and not only that, but be willing to aggressively market to your customers, your friends, family, you're exporting your LinkedIn contacts, you don't want to be the person making the pitch in the video, equity crowdfunding is probably not a fit for you. And maybe being a CEO is not a fit, because you've got to be able to raise capital in the business world to grow and scale your company. And there's no shortcut here, unfortunately. So I think generally the stories that work, to Ruth's point, that emotional connection, it's best delivered by the CEO. It's the leader of the organization. That's the way you appeal to your customers, your fans, new constituents who don't know about your business, but you inspire them. You can't inspire people through a slick salesperson or spokesman or spokeswoman. You have to make that pitch. I mean, look at the Elio video. It's a close-up of Paul's face. He is sincere. He is authentic. It's him sharing his vision. I mean, he's exposed. That connects with people. So the story is absolutely fundamental to success. And
no, absolutely.
Often overlooked.
If you look at the coolest cooler, look at the video. I mean, they did $13.5 million on Kickstarter. Again, another record-breaking campaign because of that video. That video it made a human connection to experiences we all have, schlepping these coolers up a mountain or through the sand and getting all the wheels clogged up and sitting there wishing we could make a margarita and all these kind of things. You made a real human connection to that video. There's no question about that. But I also want to say, going back to the slide before where we were talking about the management team needing to be involved, it's a team effort. I mean, you increase your chances of raising the money by 70% with a team of 4 or more people working on this campaign. So you don't want to do this by yourself.
70%. Wow, that's a great number.
Yeah. And obviously, when you're on the Internet, for example, today, we're doing this webinar. You can go to my Twitter page, and I'm promoting my own webinar. If I'm not promoting my own campaign, that doesn't look very good. You know what I'm saying?
Right.
Why would you not want to be immersed in this journey with your company? What kind of message is that telling the public, really, if you're not?
Sure. So, I'm going to stop it there because we're starting to kind of go over a little bit, and I want to get in some of the case study talk. I moved us to the next slide so we can talk about some of the sample campaigns that Darren's been point on. Darren, why don't you kind of take us through some of these pretty quickly, and then maybe we'll have a little bit of a dialogue around some of the best practices that we can see coming out of campaigns.
You got it. So I'll go through it quickly. So if you're a company that's not consumer-facing, you're a biotech company, you're trying to cure cancer, Alzheimer's, or B2B business, you still need to develop an audience of prospective investors. There's multiple ways to do it. One is through an email acquisition campaign. And to be clear, this is not buying emails or renting a list. You have to drive, you have to aggregate authentic emails of likely investors. We do this for our clients in multiple ways. One is a social media marketing contest where the issuer offers a prize and consumer puts in their name and email to enter, and then they're given additional entries for sharing it out on Facebook, Twitter, et cetera, et cetera. This campaign you're looking at, 2-week online contest, very low cost, 25,000 authentic emails. Here's another one. Landing pages. We buy Facebook ads and drive traffic to landing pages like this. We aggregated, I think, 8,000 emails for Raycon Solar. Their campaign just launched on Start Engine. This is pre-launch. This is before you do your campaign, basically saying, hey, we're this great solar technology company. We're going to disrupt this and that. What's your name, email, phone number? And then the consumer is agreeing to receive future communications. And then once the campaign launches, now we've got 8,000 emails. I want to go real quickly into influencer marketing because this is a really, really important and ultimately a very savvy strategy for issuers, for PR people. One of the best ways to drive awareness for an offering online is to have an influencer deliver the message in an authentic voice to an audience they already own. So with Elio, we contacted 500 YouTubers that each had 50,000 or more subscribers to their channel. This was the art. You don't see the copy. 3 wheels, 2 seats, one of a kind. Come test drive the one and only Elio. We had 15 YouTubers. We flew them out to L.A. We paid for their ticket, put them in a hotel. They then filmed themselves interviewing Paul Elio. They put the GoPros on the car. They took it around. Millions of video views resulted, millions of impressions from this exercise. And by the way, we didn't pay any of these people because this experience was so unique and compelling that for this particular influencer campaign, the experience was so cool, they were willing to do it for an airline ticket and one night in a hotel. So this is another really effective way to reach people online, and we do this in 100% of our campaigns. Sometimes we go after YouTubers, other times Viners, other times Instagram, rarely Snapchat. It skews a little young, but influencer marketing is key. And here's a slide to Enzo's point. You have to have a paid media budget, period, to drive tens of thousands or hundreds of thousands of page views. We have partnered with Equities as an agency because they have an audience that we're interested in bringing to the table for our clients. So here's one of our clients, the CEO of XY Findables, and we flew him out to New York at the NASDAQ Stock Exchange, and Equities did an interview with him. This is a paid, sponsored story, right? And by the way, as a PR company, you have to disclose that when you do something like this, you disclose you were compensated for this type of promotion, because this is a highly regulated industry. That's the number one difference between equity crowdfunding and reward-based. So those are kind of the two slides.
And we actually so we actually have a model where we don't have any advertising on our site. We just do sponsored stories. So we do regular content. 2/3 of it is just regular content. We have bloggers, we have writers, we have all of that. And then we have 1/3 of our content, which is sponsored content, just like Yahoo Finance does and everyone else, except that we write it because we want to control the messaging because we get concerned about what's written. So we really go factual. And then, of course, it's all about compliance. So every single article, every single video has that kind of compliance messaging on there. I love the influencer marketing because what that does is that takes online to offline. It creates an experience. I think that's a fantastic idea. I think that from a PR person's viewpoint and a marketing viewpoint, that's absolutely what you should be doing in a consumer, including, the coolers or whatever product, especially for a consumer product. And even if it's for medical, like a biotech, I can see biotechs getting doctors to come in, researchers, some of the big pharma coming over, or writers about these actual health documents and research reports. So it could be done in a B2B fashion. Finding the influencers is key. I think the biggest issue or challenge there is when you're doing the influencers, you can't pay them, because if you pay them and then you're doing the equity crowdfunding, you will run into trouble. Absolutely. So just be really careful about stuff like that.
I want to make one other quick comment, if I can. I know we're going to go into Q&A, but I know I just got an email from someone who's on this webinar. We've got some capital markets guys and investment bankers on this call, and it's important for me to mention this. Even though equity crowdfunding is the online offering of securities, it doesn't rule out for the companies on this call that fit the criteria, that are doing millions of dollars in revenue, have customers, operating history, it doesn't rule out the value of a traditional investment bank and a selling group of broker-dealers in your deal. So if you are that executive that is doing $15 million a year, 20, whatever it is, you're profitable, you're appealing to institutional money, you will benefit. You will benefit by bringing in a traditional investment bank, having your Reg A offer priced. The investment bank is going to bring in institutional money. They're going to bring in a selling group of broker-dealers. CrowdfundX, as an agency, as an example, if we generate 15,000 indications of interest, it would be nice to have some registered BDs or broker-dealers calling the 80 or 70% of people who ultimately don't buy stock on the email marketing close. So my quick feedback is for the companies that are serious about raising big money through Reg A+. You want to do 20, 30, 40, 50 million. The way to get there is a hybrid approach to the deal. An investment bank who's in this space knows what they're doing. There's a couple. A selling group. And then online marketing. You need all three.
Yep. Good, Ruth.
And let me say that, Guggenheim Partners saw this coming in 2013. They were our platinum sponsor at the Global Crowdfunding Convention. And what Darren is saying is absolutely true. And now there's just an even a bigger opportunity with Reg A+.
Well, and that is a kind of sophisticated investment bank. All actually former, actually Bear Stearns guys that went over there, and it's a huge organization. It's probably about 3,000 people. I know that it was one of the key sponsors at the actual Milken Institute's conference, their global conference. So there are some large banks getting into space, but there are also some smaller banks too. So some smaller advisors. I do see the first question here. Can you recommend some specific legal advisors that specialize in this, please? So the one that I'm going to say off the bat is definitely actually Elenoff Grossman. Doug Elenoff was actually part of the team with Ruth and so on. Anyone else, guys? I'll just throw that one out.
Yeah, Doug Elenoff, his team are phenomenal. They're definitely active in this space. I also am a big fan of Sarah Hanks. She's the CEO at CrowdCheck, and I think, don't quote me, but they may have done more 1A filings than any other legal group in the country, so they're highly active. Between CrowdCheck and Elenoff Grossman, those are different types of firms, but ultimately both are qualified.
Yeah, no, absolutely. Yeah, and Mark Roderick from Flash of Greenberg is extremely well versed in all of this. Kendall Americo from Bankroll is also another excellent crowdfund attorney. And if you go to the GCCworld.com, the speaker page, you'll see all of these people who are going to be sharing all this knowledge at our convention, along with Enzo and along with Darren and along with, Compro and Equities who are sponsoring our convention. So, this webinar is just to give all of you a very short little overview, but we are going to be immersing people for 2 days in all of this content with the country's leading experts. And this is our fifth
Vegas,
convention,
right?
And it's in Las Vegas, October 16th and 17th.
Who doesn't want to go to Vegas? So in October.
I'm in.
So yeah. So the next question.
No,
sorry. So. Oh, okay. So the next question is: do you need to register as an official company before you can raise money on a crowdfunding platform? So I'm going to turn this over to Ruth first. But an official company, I'm not sure what that exactly means. You have to be a company. You have to be a legal entity.
Right. You have to be a C corp or an LLC. You can't crowdfund Title III with an S corp. You have to have shares of stock to actually sell. So you can't just be an idea. Like you could be an idea, or say a general practitioner or something like that. On Kickstarter, you don't have to be incorporated to crowdfund reward-based crowdfunding, but you absolutely have to be incorporated to do for any regulation crowdfunding because you're selling stock, you're selling equity in the company.
And Darren, so this is all actually corporate structure stuff. So of course you have to have a tax ID. You have to be a corporate structure. So just think of it this way: if some of you have to. It's not like a GoFundMe where you can just like fund. I'm making the grilled cheese sandwich was one of the famous ones that I found. Where somebody's making that grilled cheese sandwich and you're funding it for it. No, you need to have a proper structure. You should be looking at this as an investment. These are going to be your shareholders. I mean, this is not. The other side of it too is you have to be willing to understand investor relations at some point in a post-investor world. I mean, where once you go from I'm the person who runs the business and owns the business, and once you have investors, the world changes. And you have to be able to comply and understand the rules, and that's why we always say get some good legal advice, because it's not just that it's part of the campaign, especially for someone who's doing a Reg A Plus. Of course, they're going to have legal counsel, but really you have to once you go Reg A Plus, you have investor relations process, and it's not as expensive as doing it as a public company, but it will be actually required.
There are disclosure documents that are part of the registration process on a funding portal that can only be developed if you are a corporation. For example, you have to have a business plan. You have to have a valuation. Right. You have to have a list of the officers and directors that own more than 20% of the company.
You have to have financial statements, whether they are certified or audited. So all of that information comes from the company. So you have to obviously have a company.
All right, so here's a softball question for Darren. So what is the best way to get videos for marketing your company? Would you have to pay a ad agency? Darren?
You don't have to pay an agency if you can do it yourself. That said, if you have never produced a crowdfunding video, you're probably taking an unnecessary and careless risk to do it yourself on your iPhone because you're going to save a few bucks. Again, you're talking about raising up to $1 million or up to $50 million with Reg A+. Your story needs to be produced at a level that inspires credibility, that communicates to people that you're serious about this. And it's not to say, by the way, you can't produce a cheap, creative, compelling video either. That is possible. Just as a benchmark, generally in the Reg A deal that we're doing, our average video production budget is anywhere from $15,000 to $25,000. We're producing high-end videos for high-end campaigns that have real goals. They want to raise big money. It's generally hard to do that. You could use a crowdfunding agency. There's video production teams. These companies are all across L.A., New York. You can find these people easily. But the key, in my opinion, is you want a video production person or team who has a track record of success with crowdfunding videos. So you may find somebody who's done a commercial, has done this, but you're really looking for somebody who's done an equity crowdfunding video. Ideally, next best would be a Kickstarter or Indiegogo video, and you need proof points that these people have raised capital, have generated dollars for their clients with that content.
Well, and just to go on that point, the fact is it is about actual results. The one thing that we always point out is that from the emerging growth sector, when we look at all these other companies, even in the public space, or these portals like ours that are more news-like, where we're actually creating content and news and helping companies get their message out at the same time, we always say just look at the difference in traffic. I mean, the fact is that if on the internet, you have very direct numbers. You have very direct conversion rates. You don't need to, you don't believe the story all the time, right? You want to see the results, and if they can show you the results, then great. If they can't, then that's a question for you. You can still go with that person, but that's still a question for you to really focus on. One of these questions, I'm not sure if how does a Reg A Plus or other crowdfunding campaign fit for the equity structures that are not venture-like, like a venture debt? So I'll just give you the heads up. So there's a couple of different ways that you can raise equity financing. Well, it's not really equity. So there's there's a debt structure, which is the kind of convertible note, which is usually used for seed financing because it's very hard to actually determine the valuation of the company. So sometimes what they'll do is they'll say, I'm going to lend you the money, and it will convert at the first equity round by a discount of 20%. So that's a structure that some folks use. In fact, that's a structure that I've used for SGEquities.com, and in other companies that I've raised funding with, it was a kind of convertible note with some warrant coverage, or it was just a preferred equity, which is similar to what venture funds do. They don't really like to do the note that converts. They usually do the first tier of the kind of equity structure, so it's similar to debt, but it's just done in a different structure. From my standpoint, I would say, I know a little bit about this because I've done a bunch of actually M&A, but you have to speak to this is why Darren's saying go make sure you're talking to a banker, especially if you're going to do the Reg A Plus, because you want to make sure that the structure of the PPM that's put in place or in the Reg A Plus offering, it's still a private placement memorandum. You want to make sure that the actual structure is appropriate, and you also want to make sure that the valuation is appropriate if it's going to be pure common stock, because that's going to also determine whether someone finally funds. Because Darren we can all send you tons of people, but if the valuation is off when they're looking at the documents, or they're looking at the actual private placement memorandum, and the valuation is completely out of whack, in some ways, that's going to be a turnoff. And you also have risk and liability, so you have to be careful about stuff like that. That's my comment on this. Darren or Ruth, do you want to add anything, please?
I'll just add real quickly that you don't have to raise equity. You could raise debt or equity. And again, to Enzo's point, this is where there's value in bringing in a traditional capital markets player. There are a lot of companies at the moment doing, equity deals or shares, but we're also seeing a lot of companies look at bonds. So, there's going to be a diversity of different financing tools and structures used for these deals ultimately. And then it's up to the issuer.
Ruth, anything to add to that or no?
No, I think I'm good. I think you guys covered that.
Great. All right, so we got actually 3 minutes left. What I'd like to do is just, the last question was about, are there any kind of PR companies that you might actually recommend? So I would recommend CrowdfundX, and there are definitely others. But anyone, as Darren mentioned, anyone with experience, Ruth has a CRM tool that is really geared towards helping to manage this yourself. I think that's something that's an opportunity. The equities platform, we actually are part of the process. So as Darren mentioned and Ruth mentioned, we're not an agency, we're a media company. So just like any other media company, we have the opportunity for you to market yourselves. We just don't really believe in taking and putting up a bunch of banner ads, which doesn't really give value to the audience. We rather have companies be able to talk about themselves. Any last words? So what I was thinking, 1 minute each, okay, for whatever you want to say. Ruth goes first, and then Darren, and then we'll wrap up and we'll shut down the call.
That's great. Well, first of all, I want to thank everyone for joining this call. And, like I said, we have this amazing convention. We're producing it now for the 5th year in a row. We've had people from 20 countries come and learn from us and take back to their country the process of crowdfunding. 1 year, the Spanish embassy bought 12 tickets because they have a 40% unemployment rate in Spain. This was just sort of a first dipping your toe in the water to really start to understand how powerful crowdfunding can be for you, your clients, your company. We have this product, which Enzo was mentioning. It's called crowdfundingcrm.com. And it's just like Infusionsoft, HubSpot, Aweber. It's a very sophisticated marketing automation CRM tool, and it walks you through all of the regulations.
All right, thank you, Ruth. And Darren.
Yeah, look, I think the bottom line is if you are a company that's thinking about equity crowdfunding, you've got to think about it very seriously. These campaigns are not easy, they're not cheap, and there's no guarantee of success. So your general approach to any equity crowdfunding campaign is risk mitigation. How do you mitigate risk? You generally mitigate risk in these campaigns by coming to the table with an audience. That means you're an operating company that has customers. Don't skip steps. If you don't have customers, do a rewards-based campaign first. Hire an agency. Bring on a marketing expert internally, externally. Build an audience. Don't think that you're going to raise money out of thin air. That is the biggest myth in the crowdfunding industry. We've seen this mistake made over and over in the rewards-based space, and now it's becoming a reality for companies that are spending lots of money with attorneys and accounting firms, not fundamentally understanding the mechanics of these campaigns. So I think preparation is key, and realize that this is not a quick path to cash. It is a tremendous undertaking, and there is a real value in having a team of experts and service providers guide you through the process.
Great, thank you. So I want to thank Darren Marble, Ruth Hedges, Faye Shapiro from Compro, Sylvia Davi from equities.com, and everyone here for joining this very solid kind of conversation about the difference, the marketing tactics and differences between the equity crowdfunding world. And I appreciate it. Please send me a email if you have questions. Enzo at equities.com, and I'll leave it at that. Thanks again, everyone, and hope you have a great day.
Thank you, Enzo.
Thank you. This does conclude today's webcast. You may now disconnect your lines at this time, and have a great day.